Hi, I'm Steve Miller. Call me Slim, and I have something I want to discuss. Here we are, stock market's near a high, though stuck in a narrow range through most of this year. If you think that there's much risk in the stock market here, valuations said to be reasonable based on PEs. So that means earnings, well, they've been supportive to valuations. But how did that happen? Revenues actually, they've been weak. They've been negative. We're going to look at a couple of charts here, and you can see what the real picture here is as far as revenue growth grows. United States corporate profits, that's what we're looking at here on this particular chart. Take a look at this. United States corporate profits actually have been in decline. You can see these last 3 quarters here, and you can see through 2012, well, they have not made a lot of progress for sure. And that's during a wild atmosphere of huge corporate buybacks. This chart here shows you the S&P 500, the dividends and buybacks. The red line is the S&P 500's rally since February. It's basically moved sideways since then. But you can see that the blue area, that's corporate buybacks. Well, it's up to actually a record amount of buybacks, pretty much where it was in 2007. So that is a picture of a huge amount of buybacks and something that has significantly affected the earnings picture here. So let's take a look at the reason that all of this has happened. Here, when corporations buy back their shares, the number of shares, of course, drops. So it looks like earnings improve. They report better numbers to you. So the valuations that we have right here in the stock market based on these earnings are based on financial engineering, not real growth. The FOMC has supported this with their policies. In fact, they caused it. And they want it. They want you, they want me to feel wealthy because the stock market valuations are high. And then maybe that will cause growth to come into Main Street. And well, so far that has not been happening. This is the great experiment, ZIRP, Z-I-R-P, zero interest rate policy. And they're experimenting with your money. This has, yes, a huge effect on earnings. Robert Van Bottenberg of New Edge says that this action of the FOMC has had this big effect on interest rates, in fact, to the amount of 45% of earnings growth since 2009. At the end of 2009, the S&P 500, on average, had $4 a share in interest expense. Now, in this year, on average, it has $1.50 a share in interest expense. All of this thanks to the Federal Reserve actions. $1.50 a share in interest expense, boy, that sure might change, huh? Earnings the past 12 months actually fell 2.5%. Revenues during that time have fallen 3.6%. So you can see stock market holding up, but well, maybe these numbers not so good. According to Market Watch, between 2009 and 2014, earnings grew 87% for U.S. corporations. Revenues only up 22%. That is financial engineering at its best. The FOMC, they've caused this. Manipulation of the markets, false earnings, unreal pricing, and a false sense of market valuation. And fund managers, they've been investing your money based on these false numbers, these false earnings, and assumed valuations. They're mandated to do so. They have to be long the market at these numbers created by the Fed. So when interest rates go up, a huge negative reversal in earnings prospects will be upon us. This probably is why the stock market has stalled. So while the FOMC plays games with your money and deciding when to nudge the interest rates up 0.25%, know that they are stuck in their academic dribble. And they have no real view of what the real risks are here because they think what they're doing is right. So when the stock market falls like 20 or 30%, and that's not that far off you know where to put the blame. It's on the FOMC, appointed by and populated by academics that are running our economy. So how do you get that to change? Well, voters, you rebel. And when you can, rant, rant, rant.
Well, I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been